Hey guys, I just wanted to make a quick video to show you what exactly I did to find that entry that I posted. So this is the um, this is the chart I was looking at last night, and I'll go ahead and play these candles so you can see how I got to where I made that call. Alright, so right there you can see it printed a fractal. So that I only use the fractals. They're usually not good to use, but I only use the fractals to show me where I need to put my to start my Fibonacci's. So and actually I'm going to have to shrink this screen down. There we go. Okay, so yeah, the fractal candle, the bottom of this candle here is where I'd put my Fibonacci, but I need to know where to stop it. So I'll play this a little bit more until we get a peak. Alright, so now we got a peak there, right up here. So I'll draw the fibs, start it here, drag it up to the top of that one that just stopped up here. Okay, so that was where I got my Fibonacci from. So if you're not familiar with Fibonacci the Fibonacci zones and stuff, just Google that. There's some good videos on that. And these are the 5 levels that I use. And basically it's just, candles tend to come back to the Fibonacci levels is what it comes down to. So, and this area in here would be considered like a golden zone, depending on who you ask. So that's usually a pretty strong indication if it pulls back into this zone that it's going to bounce up, or if it was going the opposite way that it was going to bounce down. So anyway, so I got my my Fibonacci on here. So play this out a little bit more. And by the way, in case you're wondering, this right here is a 200 EMA, but it's not a regular 200 EMA. You gotta get the SMA's indicator up here. And in case you're wondering what this is over here, this shows all the different time frames of this pair. That is the TTD. And then of course I got the fractals on here, and the period is 10 on the fractals. And then this one down here is just momentum. It's just a standard indicator. And these are all free indicators. Alright, so we have the Fibonacci's on here, the fractal printed, so I know where to start it. We got a level of resistance up here, so that's where I drag the top of the Fibonacci up to. So now basically what I'm looking for is, since this hit up here at a level of resistance, I'm looking for another candle to come take this candle out. So I want another candle to come up and close above that. So that's what I'm looking for next. Okay, so we'll play a little bit more. So technically this one right here, it did wick past it. So I don't recall if that was exactly what I used, because I kind of took off my drawings off of here, but we'll go with that. So basically this was the resistance level, the highest candle, and then it went down a little bit, came back up, and this one wicked up higher than this one. Okay, so basically what you do then is, when this one closes higher, or wicks higher at least, now in this case where we're looking for a short, because the price is going up, it's going to bounce and come down. So let me make this a little bit bigger. Alright, so when this candle wick took out the top of this one and went past the 0 here, now you want to take the bottom of this candle, whether there's a wick or not. In this instance there wasn't a wick at the bottom, so this would be our entry point, okay, where that yellow dash line is. Okay, so now essentially I would have taken that right, either one of these two candles. Let me play it a little bit more. So you can see, so when this candle closed, it would have closed right here. So that would have actually been the entry point. So I could have took it then. I could have took it on this candle, as long as I wouldn't want to catch one of these wicks, or when this one was up to here, either one. But basically the candle that breaks the previous high closest to it, you want to enter for a short at the bottom of that candle. So if this is an uptrend, you're looking for a short. If it's a downtrend, you're looking for a long. Okay, so this would have been the entry point here. Any one of these three candles along this yellow dash line. But ideally, like if this closed right here at the line, then I would just take a trade immediately. So I don't remember exactly what it did, but so what I would do then is you want to know, so now you know when to get into the trade, but you also want to know when to get out of the trade. So you would use this down here, the short position, and you put it right to where you would have entered. So we'll say right here. Okay, and then you'll drag your take profit down to the most recent low, which is about right there. Okay, and then you want your stop loss just above the candle that broke the previous one. So just something like that. So you can see there's the top of the candle there, and we're just a little bit higher on the stop loss. So that would be a 1.54%. I know it was more than that last night when I looked at it, but anyway, so that would be your stop loss. So when you put your trade in, whether you're using if you're trading just spot or you're doing perpetuals with leverage, whatever the case is. But the other reason I believe I knew that it was going to be a good trade, so when it was up here, let me get rid of this. Yeah, so when it was up here, the momentum was pretty high up here, and I had a feeling it was going to come down. But then what I also did was, and I don't know if this will show me on when I switch time frames, but let me look here. Okay, let me back up a little bit. Let me go to right where we entered there. Okay, so that would have been, that's the candle before we entered. Let me switch time frames and see if it'll show me. But anyway, so what you want to do is you want to go basically like 4 times the time frame that you're on to look ahead and see what that price is doing at that time. Okay, so we're on the 5, so nobody really uses like a 20-minute, so 30 is the next main one. So if you're on a minute chart, look at the 5-minute. If you're on the 5-minute, look at the 30-minute. If you're on the 30-minute, you can look to the 4-hour. 15 minutes go to an hour, something like that. So we'll switch over to the 30-minute and we'll see. Yeah, so when we look at it and it's at the same time, right around here, so we can see that momentum's up on there as well, but also we can see that this is basically like right here. I'm going to draw another line. Basically, actually right where that line is, that's a support level, because you can see the candle stopped here even though it wicked past. This wick came up to there. These two almost came up to there. So that would be a support level. And these candles are basically at the top of the support level, or of the resistance, I'm sorry. So these candles are at the top. So that means this one's at the top of the resistance level. And on the 5-minute, same thing. So you just check the time frame ahead, like 4 to 6 times ahead of your current time frame. And so this instance, because it is at the resistance level right here, that's a good one. And now let's say this price was, say, somewhere in the middle, between the top and the bottom. So if it's between the middle somewhere, then that wouldn't be a good entry, because you're looking ahead to see what it's potentially going to do. So if we go back to the 5, so then I'll play it again from here. So that was the candle that broke the previous high right here. So that's called a liquidity grab. And let me just look at the 30-minute and see what that looks like. Okay, so yeah, that broke up here. So yeah, it's basically at the peak right here, and you can see how high the momentum is up here. So this would be a valid entry. Again, if it wasn't at the top, or if you're going for a long, you would want these candles to be somewhere around the bottom. Okay. So, and if you're wondering what this white line is, that is an anchored VWAP, and you can usually do that by going. You can basically do the same thing. You don't need to use it if you don't want to, and even the 200 EMA if you don't want to, because this really will work without it. These are actually two indicators from a different strategy, but let's see. Yeah, so if I just mute that one, I take away that anchored VWAP. And if you're wondering where to get the anchored VWAP, that is over here and right there. And you basically just put it at the same fractal where you, at the bottom of that candle, at the fractal that printed for the beginning of your Fibonacci. So, but anyway, so yeah, so this one broke, so you enter at the bottom of this candle that broke this previous high, and we'll just play it. And so you'll see that, again, I'll put the thing back up here for the short. So my entry would have been right here, and I would have took it down to here, and stop loss would be a little shorter than that, just a little bit above the candle that broke the previous one over here. Okay, so it's like I said, 1.56. I think it was a little higher last night when I looked at maybe it was my entry was a little different, but so we played that out, and I'll probably have to shrink the size of the screen. So it did kind of bounce around. It took it a while to get to that mark at the bottom there. So it's kind of just moving sideways a little bit. And big massive candle. So actually this candle here is the one that hit my take profit. So you figure we started at 11:25 and that one finished at 3:10. So not quite 4 hours to get there on a 5-minute chart. So that one took a minute. But yeah, so basically you're looking for you want an aggressive move up to take an entry like this. Now this wasn't that aggressive of an entry. Let me see if I can find a better example. Like this is an aggressive move up. So if you went with something like this, it's the same kind of thing on this. So this is an aggressive move up. You'd have took this is the candle that took out this previous high. So even though it did actually go up a little bit on this one here, so you would have took your entry right down here at about 217.19. So if it keeps moving up, you're okay because your entry's down here, so you're not going to actually enter the trade. So, and then if it comes down like it did right here, so we would have entered right here. So 217.19. I forgot the wick. So we would have entered right here, basically. So 217.19, and then it kind of moves around and moves around. Then it comes down, and so I probably would have put my take profit at something like this, which would be 211, which is a pretty big one. So does it actually get down to 211? No, not really. So you'd probably still be in that trade if you got on that one. But anyway, so hopefully that makes sense to you guys. If you got any questions, let me know in the chat. And but I'll finish playing this one out so you can see where it actually ended up. So because it did come down past, and then it bounced around a little bit, and then it went pretty far past my expectations. So But again, that would have taken even, even longer to be in that trade. But like that's a big drop right there. So I think that was somewhere around here was pretty close to the lowest point I think it got to. Let's see. Speed it up a little bit here. Oh, now it's going so low that we gotta shrink the screen again. I don't know if it went any lower than that or not. I can't remember. Yep. Alright, so basically it came all the way down to here, which is probably about more than double what I anticipated. So, if you're in this trade and you go strictly off of this, hey, a win's a win. 1.56% movement is still good. But if you decide you're going to try to ride it out to a bottom, like down here, then like I said, I think that was closer to like a 3 or a little bit over 3% move. So with leverage, that would add up to a pretty nice win. But if you're going to ride it out like that, basically you have to pay attention to your trade and keep moving your stop loss. So if your stop loss is here, and the price comes down, let's say it hits your target, if you don't have a take profit, if you're just doing this manually, so if this is your goal and it hits that, and then you move your stop loss, like whatever, like that, you can just keep moving it if you want to stay in that trade. Most people don't have that patience, but yeah, so you can always do that, or you can put in a trailing stop loss. Most people, what they do is once they have a profit, they move their stop loss to their entry point, so you can't lose money that way. So, and then as the price continues in your favor, you can keep moving your take profit and stop loss, or you can take profit at several different levels, like a take profit 1, 2, 3, and 4, or there's a bunch of different ways you can do that. So anyway, this video is longer than I thought it would be, but hopefully this will give you guys an idea of what I'm doing here. So, all right, if you guys got any questions, hit me up in the chat. All right.